Hey everyone, ready for another deep dive? Today we're looking at some stocks that are, well, on fire right now.
Yeah, we're not even a quarter of the way through 2025, and there are some big winners out there already.
I mean, 9 companies with market caps over $1 billion that have already doubled in value. Like, come on.
Exactly. And it's interesting because it's not just random companies all over the place. There are some clear trends emerging.
So let's jump right in, huh?
Yeah, let's do it.
Cool. We're going to be focusing on 3 companies highlighted in, you guessed it, the Motley Fool.
Always a good source. They really know their stuff.
Yeah. For those who may not know, they've been around since '93, helping make investing easier to understand and all that good stuff.
Yeah, their website, fool.com, they have a ton of free resources, podcasts, premium services. They reach a lot of people.
Okay, so first up is FuboTV. This one is up a mind-blowing 222% this year.
That's crazy.
Yeah.
Well, a lot of that is due to, their partnership with Disney. Disney now owns 70% of FuboTV.
Oh, wow. I didn't realize it was that high.
Yeah.
So how did that all come about?
Well, actually, it's kind of a wild story. Disney was originally part of this venture called Venue Sports. It was going to be like a streaming service all about live sports, bringing in programming from a bunch of different media giants.
Oh, interesting. Like a competitor to, ESPN Plus and all those.
Yeah, exactly. But the price tag was like $43 a month.
Woof. That's a little steep, I think.
Yeah, and FuboTV saw that as a big, threat. So they actually filed an injunction to try to block the launch.
Wow.
It was a big gamble, but it paid off. I mean, not only did they delay Venue's launch, but they got a $220 million settlement from Disney.
Oh, my goodness. So Venue Sports kind of fizzled out, and FuboTV got to partner with Disney.
Exactly. It's crazy. It's like straight out of a movie or something.
A business thriller.
Right. It really shows how quickly things can change.
So FuboTV was the underdog, took a risk, and won big.
Yeah, and the impact on their bottom line was huge. Their subscribers jumped from 1.6 million to a combined 6.2 million.
Holy moly.
Yeah, they basically absorbed all of Disney's Hulu Plus live TV customers. So now they have this massive base.
Yeah, huge potential.
Lots of potential. Okay, so let's move on to our next hot stock, WeRide.
Okay, WeRide. Tell me about them.
They're a Chinese company focused on autonomous driving.
Self-driving cars.
Yep, exactly. And they saw a 122% surge.
In what, like a year?
No, even crazier, in one day.
Whoa. What happened?
So they got a strategic investment from NVIDIA.
Oh, right, of course.
Big player in AI, the chips and all the stuff you need for self-driving.
Yeah, for sure.
So NVIDIA invested $25 million.
Okay.
Which isn't a crazy amount, but it sent WeRide's market cap up by $4 billion.
Wow. That's insane.
It is, but here's the thing.
Uh-oh.
Their revenue actually declined recently.
Interesting. So is the market getting a little too excited?
Yeah, maybe a little bit. It'll be interesting to see how that plays out.
For sure. All right, last but not least, we've got Hims and Hers Health.
Oh, yeah.
A telehealth platform. They're up, 150%?
That's right. They have a pretty interesting story, actually.
Oh.
They started out focusing on men's health, offering like discrete online services.
Oh, okay. Yeah, I've seen their ads.
And their growth has been incredible. Since going public, they've had consistent growth, like 45% year over year.
Wow. I wonder if some of that recent jump has to do with all the buzz around those GLP-1 treatments for weight loss.
Definitely. I mean, that whole market has exploded. And Hims and Hers is right there.
Makes sense.
They offer like compounded versions of those treatments, which can be really expensive. And they're, really advertising that. They even had a Super Bowl ad this year.
Smart move. So it looks like they're really hitting the right market at the right time.
Definitely, yeah.
Okay, so we've got these 3 companies, right? They're all crushing it in early 2025. But, are we seeing some bigger shifts happening here?
That's a good question. I mean, are these just individual wins or the beginning of some major trends?
Exactly. Like with FuboTV, for instance.
Yeah.
Could their success, with Disney and everything, point to a consolidation happening in the streaming market?
I think it's definitely possible. I mean, the competition is only getting more intense, right? So we might see even more mergers and acquisitions as these companies, fight for subscribers.
Yeah, it's getting tough out there. So what about WeRide then?
Hmm.
Does their partnership with NVIDIA, does that suggest that self-driving tech is finally ready for prime time?
It's certainly a big endorsement. I mean, having NVIDIA on board could encourage other major companies to jump in. But there's one big thing that we can't forget about.
What's that?
Regulations.
Right.
Are governments around the world going to actually allow driverless cars on the roads, like at scale?
Yeah, that's a big question mark. It could make or break companies like WeRide.
Absolutely. So even if the tech is there, the rules might not be.
Okay, so we've got potential consolidation in streaming, maybe the rise of self-driving cars.
Yeah.
What about hims and hers?
Mm.
What does their success tell us?
Well, they're definitely tapping into some big trends like telehealth, and then of course there's the massive demand for weight loss solutions.
Yeah, true. I mean, the pandemic definitely made telehealth way more mainstream, right?
For sure, people got used to, seeing their doctor virtually, and it's just so convenient.
So much easier.
Plus, that whole weight loss market is just booming. I mean, it's worth billions.
Wow.
And Hims and Hers is positioned really well, offering a more affordable option.
Right, right. So are we saying that, maybe in the future, telehealth is just the norm and companies like Hims and Hers are like leading the way?
Yeah, it's definitely possible, but it raises some interesting questions.
Like what?
Well, like, will traditional healthcare providers adapt? Are we going to see more partnerships between tech companies and hospitals and all that? It's definitely something to keep an eye on.
This is really making me think. So we started with these three companies, and now we're talking about like changes to entire industries. It's pretty wild.
Right.
Okay, but let's zoom back in for a second. Like, what should actual investors be looking at when they're, thinking about these companies?
Well, with FuboTV, it really comes down to execution.
Okay.
They have all these new subscribers thanks to Disney, but can they actually keep them? Can they turn those customers into, paying subscribers?
So it's not just about the numbers. It's about making sure those customers are actually happy.
Exactly. And they have to think about their content strategy, too. Their focus on sports has been a big draw, but can they expand? Like, can they appeal to a wider audience?
Right. Okay, what about WeRide then? What should investors be looking at there?
For them, it's all about technological progress.
Okay.
I mean, the autonomous driving world, it's super competitive. You've got Tesla, Google, all these big players. So WeRide has to prove that their tech is, better, safer, more reliable.
Right, they need to stand out.
And they've got to be able to, scale that technology up.
Yeah.
And that's going to take some serious investment.
In R&D.
Yeah. They have to stay ahead of the curves, keep innovating, but they also need to be smart with their money. They're still relatively young and they don't have huge revenue yet.
It's a bit of a balancing act.
Exactly.
So, execution for FuboTV, technological advancement for WeRide. What about hims and hers? What are the key things for them?
Well, for them, I think it's about market penetration and building a strong brand. They've made a name for themselves in the telehealth space, but they need to keep expanding geographically, but also, in terms of the services they offer.
Makes sense.
And they have to really establish a brand that people trust, like a real connection.
Oh, right. You mentioned regulations earlier with WeRide.
Yeah.
Do those play a big role for hims and hers, too?
Oh, absolutely. I mean, the whole telehealth world is pretty new, so regulations are changing all the time.
Right.
Hims and Hers has to be really on top of that, to make sure they're operating legally and ethically.
So they need to be flexible and ready to adapt.
For sure. And they can't forget about competition either. There are new telehealth companies popping up all the time.
Okay, so we've talked about the good stuff, but let's be real. There's always risk, right?
Oh, absolutely.
Every investment has some level of risk. So what are the big ones we should be thinking about with these companies?
Well, for Fubo TV, I'd say competition's a major one. They're going up against some giants, Netflix, Amazon, Disney. They all want those subscribers.
Yeah, that's a tough crowd. So how can FuboTV stand out?
Well, like we said before, execution is key, and their focus on sports could be a real advantage. But, it's a bit of a David and Goliath situation.
Right, right.
Okay, for WeRide,
Mm-hmm.
I'd say the biggest risk is, the uncertainty around the technology itself. Self-driving cars are still pretty new.
Yeah.
And there are a lot of questions, will it actually work? Will people feel safe? Will it be reliable?
So investing in WeRide is kind of like you're betting on the future.
Yeah, exactly. Investors are, hoping that they'll be one of the companies that figures it all out.
Fingers crossed. So what about hims and hers?
I'd say the regulatory uncertainty is a big one for them.
Right, right.
Like we talked about, the telehealth landscape is constantly changing. They have to be really adaptable.
So competition, technology uncertainty, and regulatory issues.
Yeah.
Anything else?
Well, you always have those general market risks,
Like what?
like a recession or some global event that could affect any company.
That's true. Good reminder that, there's no such thing as a risk-free investment.
Exactly. Which is why it's so important to diversify.
Yeah.
And don't expect to get rich quick.
Oh, yeah.
Investing, it's a marathon, not a sprint.
So we've talked about a lot, the potential, the risks, the trends. What's the big takeaway? Like, what should our listeners really understand?
I think the main thing is, this is an exciting time to be an investor.
Mm-hmm.
We're seeing so much innovation in so many different areas. And there are opportunities out there for people who are willing to, do their research and take a few risks.
But you have to be careful, too, right? There's so much hype around, like, everything these days.
Absolutely. You have to be level-headed. Think long-term. Don't get caught as in those get-rich-quick schemes. Focus on companies that are solid, with good fundamentals and a track record of success.
Be smart about it.
Exactly.
Okay, so be informed, be patient, and be realistic.
That's it. And you know what? Investing should be fun. It should be a journey.
Not just about the destination.
Exactly. So, enjoy it, learn things, explore, and hopefully grow your wealth over time.
Love it. That's great advice. Okay, so we've covered a lot of ground here, all these hot stocks, the bigger picture stuff, investing strategies.
Yeah, quite a bit.
Hopefully, our listeners feel a little bit more equipped to make some decisions.
That's the goal.
Okay, before I wrap up, I want to shift gears just slightly and talk about resources. Investing can feel really overwhelming.
Yeah.
Like, you need to be an expert, but it doesn't have to be that way, right?
Definitely not. I mean, there are so many resources available now, especially for, everyday investors. You just got to find the right tools and the right information that fits your learning style.
Yeah, so where do you even begin? There's so much out there.
Well, the Motley Fool is actually a really good place to start.
Right.
Their website, fool.com, they have a ton of free stuff, articles, podcasts. They even have a community forum where you can chat with other investors.
Oh, cool. I didn't know that.
Yeah, and then they also have premium services if you're looking for, more in-depth analysis and stuff like that.
Okay, so it's not just about finding information, right? It's also about learning how to use it.
Exactly, and that's where, financial literacy websites and online courses come in. There's some really great free resources.
Yeah, for sure.
That can teach you the basics, like how to read a financial statement or, the different types of investments, how to manage risk and all that.
Oh, I've seen some of those. Khan Academy has some, and Investopedia, I think.
Yeah, those are great. And don't forget about books. I mean, there are tons of books out there written by, experienced investors, financial gurus.
Oh, yeah, good point.
Who can give you, really valuable insights.
Okay, so we've got websites, courses, books. What about tools? Are there specific tools that you find helpful for, analyzing stocks and stuff?
Oh, yeah, tons. Like stock screeners. Have you ever used one of those?
No, what is those?
Oh, they're great. You can filter stocks based on, certain criteria, like market cap or industry or, financial ratios. So it hooks you narrow down the options and find investments that, kind of fit your goals and your risk tolerance.
So it's like having a personal assistant, but without the cost.
Exactly. And then there are portfolio trackers.
What do those do?
So those can help you keep track of, how your investments are doing. You can monitor your performance, make adjustments if you need to.
So it's not just set it and forget it.
Right.
You got to stay on top of things.
Yeah, you got to be active, make sure your portfolio is still aligned with, your goals.
Right. Okay, so we've talked about a lot of different resources. What other advice would you give to someone, who's just starting out?
I'd say finding a mentor can be really helpful.
Oh, yeah.
Or, joining an investment club.
Right.
It's really valuable to have people you can, talk to
Mm-hmm.
who are more experienced, to get advice and bounce ideas around.
Yeah, investing can feel intimidating when you're first starting out. It's good to have a support system.
Exactly. And you might even pick up some, great tips from other investors.
That's true. And, never be afraid to ask questions.
Oh, totally.
The more you learn, the better.
For sure.
Okay, well, we've covered so much today.
Yeah, we have.
These hot stocks, all the trends and strategies. But I think the main takeaway is that investing doesn't have to be a mystery.
Right.
Anyone can learn how to do it.
Absolutely.
With the right tools and resources.
And a little bit of effort.
Yeah. So huge thank you to all of you out there for listening to our deep dive and to you for breaking it all down for us.
It was my pleasure.
I hope you learned something new and that you feel, inspired to start investing.
Or, keep learning if you're already on your way.
That's it for today's show, everyone. Until next time, keep exploring, keep learning, and remember, knowledge is power, especially when it comes to your money.